Hello everyone, in this video I'm going to discuss a simple problem on accounting equation. So we know that the accounting equation formula is capital plus liabilities is equal to assets. If you look at this particular problem, it says that what will be effect of the following on the accounting equation. So the first one is started business with cash for rupees 45,000. The second one says open a bank account with a deposit of rupees 4,500, and the third one says bought goods from Sun and Company for rupees 11,200. So these three transactions have to be fitted in the accounting equation. Now if you look at the solution, now we have the asset on the left hand side and the liabilities plus capital on the right hand side. Now if you look at the first transaction, it says started business with cash. So remember, business has been started with cash for rupees 45,000. So that's why under the asset side, cash is 45,000, and on the right hand side we see capital 45,000. So remember, under the accounting equation, assets should always be equal to liabilities plus capital, or assets should always be equal to capital plus liabilities. So remember, I started business with cash for rupees 45,000. So asset is 45,000, and this initial contribution made by the owner is capital. So you can see on the other side also is 45,000. So asset is equal to capital plus liabilities. Now if you look at the second transaction, it says open a bank account with a deposit, or open a bank account with deposit rupees 45 or 4,500. So you can, since he has opened a bank account, so once you have to open a bank account, cash has to be deposited into the bank. So now we can see that from the cash, out of 45,000, 4,500 has been deposited into the bank. So you can see on the asset side, under the bank, there's an amount of rupees 4,500. Then from the cash, an amount of rupees 4,500 has been deducted from rupees 45,000. So it means that from rupees 45,000 total cash, 4,500 has been deposited into the bank. So now the cash which the uh, business will have will be 40,500, and on the liability side and the capital side, capital will remain intact, that's 45,000. So now if you compare between the asset side and the liabilities plus capital side, 40,500 plus 4,500 will be 45,000. So assets is equal to liabilities plus capital. Now if you look at the last transaction, says bought goods from Mr. Sun and Company for rupees 11,200. So now we know that these goods has been bought on credit. Remember, goods has been bought, so goods has come into the business. So that's why on the asset side you can see stock of rupees 11,200. And since these goods are being bought on credit, and we know that if goods are being bought on credit, the suppliers will be the creditor of the business because we have to pay them into the future. So now if you look from the right hand side, under the liabilities, creditors are right. So creditors for rupees 11,200. So according to the accounting equation, says that assets should always be equal to liabilities plus capital. So if you add 40,500 from the asset side plus 4,500 plus 11,200, it will come to rupees 56,200. Now if you add from the right hand side, that is the liabilities plus capital, 11,200 plus 45,000, that also will come to rupees 56,200.